Okay, in fact, let's talk about the money flows which are supporting our market. The global money has returned. Kind of buying that we saw yesterday, more than 3,000 crores. We have Brandt, Director of Research at EPFR Global, now joining us. Cameron, good morning. Thanks a lot for joining us. How much of this money flow that we have seen in Indian market or emerging market over the last 2-3 weeks is essentially a result of carry trade? Would you have any kind of data to support that?
I don't, but I'm seeing enough come into both the mutual funds and the ETFs to make me think that it is more driven by fundamentals. I should also say that it's now this return to emerging markets has been going on since really sort of middle of the third quarter. And we've seen a really significant rotation now from developed market funds of pretty much all stripes to emerging markets. Still seeing more of a preference for diversified exposure, but overall this is now an established trend, which I think is sort of driven by a sense that emerging markets, certainly in relative terms, have more upside than their developed market peers.
Okay. Cameron, good evening, and thank you for staying up for us. Is there a pecking order within emerging markets? India, foreign flows deserted India up until mid-February. It has resumed thereafter, and there's been quite a flow. Anything you can tell us in terms of the markets preferred?
There's a very, very clear pecking order, and it is at the country level quite simply tied to perceptions that there may be a reform story. You probably heard me say that before, but it continues to be extremely marked, and it can be quite a flawed reform story too. Among the markets that are also benefiting from this at the moment are South Africa, Saudi Arabia. Investors don't seem to have made their mind up about Mexico, but a lot of money has been going into Brazil recently. And the Modi administration off and on has been seen as a sort of a reformist one. So hopes are building again that he'll have a mandate and that there'll be another surge of reforms post-election.
Cameron, hi, good morning. For the Indian markets particularly, the foreign investors have bought about $3 billion in 2019 so far. Can you throw some more color on what kind of money is coming through? In the sense, is it more the hot money, as we call it, the ETF-driven money? And what's your own prognosis on how the money could flow through into markets like India?
It's certainly coming in sort of shaded to the ETFs, and you're certainly right that that's money that can leave as fast as it came in. But as I said earlier, this is an established trend now, and it's hard to fault the logic. If you look around for sort of the major risk factors, the U.S. is moving into its next election cycle, so there's not too much you can hope from the current political dynamic, and Europe is also facing, as it has been constantly for the past decade, a series of challenges which are making investors step back. And Japan, is viewed as very vulnerable to the unsettled trade issues between the U.S. and China. So I think while people are expressing their interest through ETFs, that this is a solidly rooted trend, and I think it's liable to persist, unless there's one of those sort of major geopolitical incidents that makes people sort of kick the tires on the emerging market story. But I don't see one of those on the immediate horizon.
Okay. Cameron, an interpretation by some economists here is that global central banks are all loosening up. The Fed, the ECB, the Chinese stimulus, both fiscal and monetary. And therefore, this gush of liquidity has still a while to go. What would be your thoughts on this, this observation?
I think it matches the facts on the ground. The Fed has certainly signaled that it's going to be patient and is sort of reassessing quite how far it's going to go to draw down its post-QE balance sheet. The ECB made a very strong statement last week to the effect that it sees more risk to the downsides and isn't going to sit around and wait for them to fully materialize. And the Bank of Japan has set itself an inflation target that it's still well short of. So I think that is a perfectly reasonable assumption. And the bigger question may be, how much effect you're going to get from this extra liquidity. But certainly, the backdrop for emerging markets it looks much more benign than it did even 4 months ago.
A final question: what about commodities? No one preferring that asset class?
Certainly the fundamental growth story for commodities isn't looking as good as it did at the beginning of last year. Growth is not the only reason that people get into commodities, and with sort of the return to easier monetary policies in the U.S. and Europe, certainly I think there'll be some people who look at them again as sort of a hedge against depreciating or weaker currencies.
Okay.
But we're definitely seeing a much more defensive view expressed through the sector fund flows at the moment.
All right, Cameron, we leave it at that. Thank you for joining us and giving us a sense of which way flows are heading. Money moving out of developed markets and into emerging markets. That's something that markets like India would definitely like. Let's take a quick break on that note. But coming up on the other side, plenty of technical advice. How do you approach the markets as they hit all-time highs? Sudarshan Sukhani, Mitesh Thakkar and Prakash Kapa will join in.